here. Let's see. Let me stop that. Pause. Hey, good morning, guys. Thank you for your patience. Ken at Tortoise Capital, Creativity202 session, um, Sunday morning, February 3rd, 2023. We'll start with a little check in. If you don't mind, I see myself on the screen first this time. This weekend's sessions were really, really good. There were three little episodes that I thought are well worth your listening to. The first one was the session we did with Paul's wife, Carol. She had some questions about trading and the things we do because she'd overheard us talking with about that during some of our sessions over here in Paul, and so she had some questions to ask of me and Bill. So we said, well, yeah, but you're not allowed to do anything with this for a year because I don't want that on my conscience. And she asked a series of really good questions, and it allowed Bill and I to almost get back into starter mode to just say it fresh for the first time in a little circle. And I thought we articulated the sniper approach, especially the slow sniper that Bill's working on with who we call Trader X. I can't say his name on this live out of respect and privacy. And it's like a 3-day, 9-day sniper, fast and slow. And we kind of just walk through all that, and then walk through a theory of critical states and turning points, and seasonality of MACD, and how to take an integrated look, and then how to assemble a portfolio of members of your herd that you want to manage through their life cycle of the seasons. And she understood instantly that what we were looking at were the signal moments, and that you have choices on how to implement the signal, whether it's owning the stock, owning options, splitting your purchases, futures, mutual funds, and all that. And then, to my delight, she'd never heard of exchange traded funds, and said, well, geez, why would I ever use mutual funds again? And I said, that's right. So it was really an amazing session that laid out the principles of everything we do, and I think Bill's going to turn that into a presentation of what we do to some local money managers up there in Michigan, which is why he and Trader X are working together, is to sort of craft a longer-term, robust system that would help guide during the long stages of secular markets, positioning and stuff like that. So that was session one that was really, really good. I thought session two, that Dan and I did, talking through zero states, paying attention to news or not, why framing was important, how getting to closure in planning, preparation, execute, and assess is absolutely crucial. And I thought I got a little excitable about that. And I thought, man, I'm being an asshole. Pardon my language. I was being a little mean spirited, but then I realized that no, I wasn't. I was trying to make a point. And so it was. If I may borrow your comment, Dan, it was. He noted that if the market was going to be strong, then he would consider going long Apple. It was like if the market and tech and Apple were showing strength, then I would consider going long. And unpack that to say that's you can't you can't leave it there, because when you're only halfway up, you're neither up nor down, right? As the old saying goes. When you're up, you're up, and when you're down, you're down. And when you're only halfway up, you're neither up nor down. Um, and it was reminiscent of the moment we had with Ken Hum. I mean, way back in COVID, at the very start of the bar by bar. This is 2021. And Ken Hum and I agree that that is the most significant moment that we've had together with his trading, and which I think turned everything around. Not turned it around, but really just caused him to drop all the non-essential things. And that was the idea that right after a successful trade, and he exited it, and in the bar by bar, he was emotionally tired and cognitively tired because he'd just gone through a bunch of bar by bar decisions on camera in public, and then I asked him, "Hey, well, what are you doing?" "Well, I'm gonna stalk it. I'm gonna study it." And I said, "Well, no. There's a there's and you have to immediately frame it and get the frame done." And so we started with where the price was, and we simply said, "Now, I want you just to start. I want you to consider trading it, and now I'm going to start moving price north. And you look at that screen, and then you tell me where you feel the first impulse to go long." And so I started moving it up here, and he said, I would want to be long. Okay, so let's just put a green line right there. And then now let's go back to the original price. Now I'll start moving south. Tell me where the price is that you're sure that you would need to be short. So he started doing that. So now we identified a green line and a red line, and we said, well, in the middle of that is a yellow box. That's the zone in which, for you, it's still noise. It's still the yellow zone. That is probably a manageable risk box. Now let's figure out where. I don't even want to know why you feel like you can go long there. Just the fact that you felt an impulse says that there's something deep inside you that triggered. We'll come back and find out what that trigger was. But just for now, you've recognized the size of the yellow zone. Now let's inspect the green zone and the red zone and see how far this thing could reasonably go. We're just looking for a not unreasonable move. What move could it go to before it stops going in that direction? So essentially you're exploring support and resistance lines, previous turning points on the RL10, because we know those are significant. It could be layers of Bollinger Band boundaries, Z1, 2, 3, something like that. Could be frog boxes. Could be whatever standard instrument you're using to measure moves. What is the unit of measurement for that symbol that makes sense? It doesn't seem unreasonable. Where are the regression lines at? And because price was once there, so all of that. So then we could then, when we did that in both directions, we said now what we have is a trade frame that represents green zone, yellow zone, red zone, and it's tradable on that basis. Just the fact that you were able to complete the thought and get the frame in place, you now know enough to be able to trade it. I said now, and it took us about a minute to do that, I guess. Maybe 2 minutes. I have to go back and check the timing on it because it was the first time we did it exactly that way. And then we said, well, it took about 2 minutes to do that. Hey, you're trading on 3-minute bars. For the first time, with no guidance ahead of time or preparation, you completed a trade frame cycle within the time frame of the bar that you're studying. And now you have a complete trade frame ready to go. I said, now how do you feel? He says, well, I'm not tired anymore. And I realize I don't have a bias for long or short because I fully explored with an open mind movements in both directions. I said, well, let's go. And so what we learned is that the aftermath of the closed trade has an emotional valence there that feels like work that has to be done before you're ready to go do something else, which is true. And it turns out that the best way to get into the zero state is also the next task of trading, which is just simply frame the trade in both directions using the standard questions, hints, and allegations. That's how to get into the zero state, is to get there by framing the trade in both directions. Now you are disassociated from your bias. You've turned all of the latent residual emotion from the last trade into the energy that you need to do the work. And in fact, one of the things that tells you you're ready to trade right away is the fact that you have an emotional feeling about the trade. You're in the trade, it's in play. So you're in play, you're warmed up, your brain's thinking. It's thinking enough so that you actually have energy on hand ready to use. And we know from true storytelling and Fletcher's work that anxiety, which is an emotional state of energetic tension, is simply the raw material or the energy that you need to convert into a story in order to put together a plot to resolve that tension. If you don't make sense of it with a story, that's where that thing just starts feeding on itself and it becomes exhausting because you got all that potential energy and ready to go, and you haven't put a load on it. So what I saw, what triggered me, Dan, was when I saw those words. Was I am going to consider? I realized without even realizing you were exactly in that same state that Ken H was, and that is neither up nor down. And so we walked through a process of framing and talking about how you spend your energy, excuse me, and your time. And I thought by the end of it, I felt cleared in the sense of it, everything I needed to say about that. And then I realized afterwards that this was the same speech we'd had with Ken H in the bar by bar trading, which is just absolutely essential. I need to pull that out and make a short story out of that. It's also there's a follow up in there somewhere in the material in the woodshed that talks about the most important moment in the trade, and that was kind of had the same kind of profound effect on me, and that is when you move to no lose plus dinner for two, and why that's so crucial in the way that we're approaching the trade. It's one of those, you're stalking a tiger and you realize, hey, we've got him and there's a lot of work to do, but this tiger ain't eating me today, and now I can get on with the business of, tiger work or something like whatever that is. So I thought that whole session, just the regular Saturday night session, had a lot of merit to it. And there was a third session I did. I can't remember even what it was, but it was really pretty good. Yeah, so it was Carol. It was the one we did last night. And I'll think of the third one later. But those two alone were really, I thought, well worth your attention. And so that is not only my check-in, that's also my work in progress. Since we're here, I'm going to hit the tone and just pick it up where we are, and go along with it. Oh, I remember the third one. I'll do it later. Oh, it was like I figured out what the awesome workshop should be, and I think it came out just before we started talking with Carol. Ernie will remember this one. I remember now what it was. And it was the idea of I am borrowing it shamelessly from Abe Crystal and Rizuku, and what they do is they're helping people get to closure on things. And so they have a little sprint or a scrum workshop session. And what they do is, just for round numbers, I think it's $97 for a 4-hour session. And what you do is you come with work that needs to be done. And you get in, they don't call it a true storytelling circle because they haven't figured that out yet. But you just come into that circle, and the Rizuku people have a team of their folks on station ready to help. And so you come in and you announce what it is you're working on and what you're going to be doing. And then it goes around the circle. Everybody has like a 1 minute intention. And then people just go to work in their regular workspace doing their thing, and the phone line is open or whatever. And there's something like an hourly check-in. Hey, how are things going? What's up? Or not. If you have a question, you go to the main room in Zoom and say, hey, I need A, B, C, D. And they say 1, 2, 3, 4. And then off you go. And it may be that you have to do a breakout room and you work on something, and you do a mini lesson and get it going and so forth. And that keeps going, and you got skin in the game because you spent $97 and you announce to people what you're working on for the next 4 hours, and then you get it done. And you come back and you brief what you did, and you show your work, and this is what came to me, and this is what happened. And they're happy. And I was thinking, as a line of operation, imagine you were a coach, Tom Hardison, and you had 10 people at $97 for 4 hours. You can live on that, and you can work on that. And the value to the people is not just the accountability, partnering, and the work they're doing on their own stuff. It will also have the creativity payoff of listening to 9 other people working on things sort of in that same area, probably, if it was all traders. The Rizuku people are not traders. They're working on their own business or putting a course together. So the technical piece of becoming a subject matter expert that can teach it, which, as we know, is the same thing that traders are doing, is that your trading process is a learning process. You're actually creating a course that you're teaching yourself about what works and locking in your lesson plans that you want to teach to somebody else. So when you adopt that kind of learning mindset and teaching mindset, you're actually in the exact correct mode to engage with the market, who is your teacher. It's anyway. Trading and research is a learning plan. It's your trading plan is your learning plan to learn what the market is trying to tell you about its condition and what the opportunity is. So anyway, and then I had the insight. Well, shoot, if you asked them for $97 for that 4-hour session and set it all up, then give them come to work when you're ready to work. And so we're going to keep the lights on, and we'll be waiting for you. And then you buy a coupon book of 10 tickets, and you use it when you need it. And so you just keep running that thing. And I said, well, what kind of things would they be working on? I said, oh, yeah, obviously, Tom Hardison's 70-point checklist. Where are you in the work and the thing you want to work on? So when you're ready to work on that stuff, you call up that mini lesson out of the catalog, listen to it, do the exercise, and you may be got it. No, I need office hours on that. I need the Maker's Mart, the little workshop thing where everybody just gets together and uses the common tools, and people are there to help, and you show your work and you get inspired by what they're doing, and you got this little, beaver lodge of hard work going on. And so you could charge $50 for that for a session of 10, and just use it in the next 10 weeks, or you just use it until you're done using it. Sort of like the turnpike, you pay as you go kind of thing. So you can pay as you go, or you buy a coupon book, and that gives you a logical place to do work in progress in a profound way. I said, oh yeah, well that's kind of where I was imagining us going with the 202 graduates, and that is, it doesn't matter really whether you're working on the experiential learning exercise from the creativity book and you're using that experience to get stronger creatively, or you're actually working on a piece or a problem of a trading plan and putting it together and get, because either one of those creates the tension that generates the story, which generates the creative muscle, which produces the innovation to be tested for suitability and feasibility and acceptability. Those are sort of the three acceptance criteria by the folks that are just outside of the R&D shop waiting to do something. Feasible means I can afford, so we're going to say suitable, feasible, acceptable, SFA. Suitable, this is how we evaluate Army projects. Suitable is it does the job. The thing that I was wanting to do, well, it does that. Feasible means that I can afford to do it in a reasonable budget of time and effort and attention, that it's it doesn't break the bank to do the thing that I just hired it to do. It's affordable. And then acceptable means that two things. That it means that it doesn't violate my sense of propriety, values, or ethics. It's an ethical thing to do, and I can see myself doing that in an honorable way. So it meets the kind of the value. Is this the kind? Am I the kind of person that could do this in public and wouldn't be ashamed of it or wouldn't be whatever? Yeah. And then the second aspect of acceptability is risk. Am I is the risk that is inherently associated with doing anything or doing that thing, is the inherent risk worth taking for the reward that I am reasonably allowed to expect? So it's really a trade frame. If you think about it now, the trade frame mentality that you use to judge the value of a trading idea, of a trading frame, is the same thing that you go through, I think, when you're testing some spark of a creative idea to see if that could actually work and really do it. It forces you to get to a acceptance decision, which I'm going to circle back to Dan's comment and Ken Hum's moment, which is I'm no longer considering getting long or short, whatever. I've actually framed it and I got to a decision and I'm ready to go as soon as price leaves the box. And now it's like the sniper. You put that little raging animal in the box, the more agitated he is, the more certain you are that that little Tasmanian devil is going to come out of that box and run amok in some direction. Now, the beauty of the trading is it's either going to go north or south. He just is, and he comes out of the box running. There you go, off you go. So, suitable, feasible, acceptable are the criteria that we use to make a decision. And so, in the thousands of proposals that the Army considers for battlefield innovation, we use that model in order to move it on through the process to the next stage, which is plan, prepare, execute, assess. That's the mindset. I guess this was all triggered by reading a little compendium of Harvard Business Review articles on make better decisions, and the guy's point was stop planning, start deciding, get to the decision, and then once you do that, figure out how to get there economically and efficiently, and then so you're improving economy and efficiency and quality of the decision. And it deals with it's a response to uncertainty, really. It's like you're trading off time and space for, time and action. and getting started and doing first things first and initiating necessary movement. We in our troop leading procedures with NCOs, uh, that's everything. I know I've talked about the other ones, the plan, prepare, execute, assess. But man, now that I think about it, I need to do a little summary and conclusion on what we call troop leading procedures. And I'm going to call it TFP, trade framing procedures, which is receive the mission, make a tentative plan, initiate necessary movement, supervise, and refine. So there's 4 stages in it. And this is what we train our NCOs to do, our non-commissioned officers, our sergeants. Receive the mission, and that means listening well and digesting it in a certain way, looking for the key and essential information, the purpose of the mission, the task to be done, the time and place, where it's the 5 W's: who, what, when, where, why, and how, and plus how. So receive the mission is a certain process. And then you make a tentative plan. So you just get on with it, and the plan is done when you've got the frame in place. There it is. There's my tentative plan. It's a 5-paragraph field order, which also sort of takes the form of who, what, when, where, why, and how, answering those essential questions. And then you initiate necessary movement on the basis of what you just decided. And there are things that you do before you've completed the plan that you can do because they're going to be part of any plan. In our case, that would be like getting all the stats and the numbers and getting the frame drawn and the size of the box and marking up the chart in the usual way before you even decided if there's a 3-to-1 or a 2-to-1, whatever criteria. So initiate necessary movement and then supervise and refine. Complete the plan, then supervise and refine. So 5 steps. I'll send this to you in writing with a flashcard. I'll probably talk about it again tonight. Receive the mission, make a tentative plan, initiate necessary movement, complete the plan, supervise and refine. That's the important thing there, was the initiate necessary movement, because you got the platoon waiting for you while you're thinking. And there's things that they can be doing that are always going to be good, or things I need to know to complete the plan. So you initiate necessary movement. And now the little beavers are out there beavering away while you complete your plan. If you think about that, that's like just enough to get in the tactical zone, and then I get to no lose plus dinner for 2. I'll tell you right now, forever and amen. As soon as I get to no lose plus dinner for 2, I have completed my plan. My plan for the trade is to get to no lose plus dinner for 2. Because after that, it's a free lottery ticket. And I know how to let it run until it's given me as much as I think I can take. That is the exit management. And I manage all my trades exactly the same way. There's not like a, different whatever. No, that little exit strategy is the important system. So, receive the mission, make a tentative plan, initiate necessary movement, complete the plan, and supervise and refine. That's your managerial exit, right? Your exit strategy is that thing. And then when that's done, you complete the mission and get ready for the next one. So that's part of that continuous process. So that's what we teach our non-commissioned officers to do. And that is the first part of a set of 3 problem-solving processes. That's what you do when you sort of know what to do. You do it. Troop leading procedures. The military decision-making process is a rational utility model where you go through, develop courses of action, evaluate them, judge them, and commit. That's sort of when you have a semi-structured problem with a couple of choices to make. Should I go long? Should I go short? Could I go long and short? That kind of stuff. Which time frame should I be using? Which target to select from the many? Rational utility model. You want that to be routine and business-like. And then the third, that's what you do with semi-structured problems in order to choose between legitimate, reasonable alternatives. And the third one is Army design methodology when you have an unstructured problem and you're trying to just figure out what's going on so that you can make a tentative plan about what to do so that then you can make serious choices within the boundaries that you've set. It's an appreciation effort to go from a blob of undifferentiated information like what's as soon as you open up and see price, like what's going on. It's your rapid sense making with some tools that gives you the answer to the question. Is there an actionable trade in here? It feels like there is. Okay, now let's go into the workshop and frame it out. It's that's sort of what planning is, in a very broad sense. In plan, prepare, execute, and assess. It's the creative and scientific approach to making the uncertainty and chaos of an unstructured problem into a semi-structured problem that you can put good practice, good routine practice on to come to a choice from among equals. So those are the three kinds of problems that we see: structured, semi-structured, unstructured. And we have a response to each one of them. If it's a structured problem, I put troop leading procedures and unleash the hounds. I put a platoon on it and off they go. If it's semi-structured, I complete the structure through that rational utility model of military decision making, come up with some courses of action, compare them, decide, and then go. That's what we normally see when people are teaching how to solve problems. They normally teach that kind of rational model. And that's good for most things when they're legitimate, obvious choices to make that you don't even have to work hard. Yeah, I can do this or I can do that. So you decide. And then the unstructured problem where it's really what is going on is the typical, because you've tried to have two or three good ideas immediately leap at you that you could then choose from. But if you don't even have that, now what you've got is an unstructured problem. You've got to decide where to set the boundaries on your problem space and then start the systematic reconnaissance to tell you what's actually going on so that you can get a feel for the ecosystem and then put together a rational plan to address that. That little creative spark, that design thinking, is what Fletcher's work really helps us do, is the ability to rapidly put a frame around things that we can then develop into a trading plan. So anyway, that's what I wanted to complete that thought. Those were the three really good sessions that we had. We didn't record the first one so much on the workshop, so I needed to get that thought out of my head. So that's my check-in and work in progress. And I disassembled my little gong striker here. Holy mackerel. Sorry about that. So that's my story, and I'm sticking to it. Ready? I was so agitated about that little set of stories that I hit a tone that I don't normally hit in that sequence, and I forgot how nice it sounds. Yeah, Dan.
Well, I thought I'd go first since you were talking about our session last night in the swing trading, and that was a very important insight for me that I had a trading plan which said, okay, if I get to here, I'll consider doing this. I need to put the second P into the PPAE or PPEA, plan, prepare, execute, assess. I wasn't properly doing my preparation. So more to follow on that. But my story for today concerns I guess it's the final exercise, number 29. Because I was a little behind, let me try and find my notes here. Okay, here they are. The brake inertia. And I focused on the first exercise to identify 3 unfixable problems. And then I haven't had time to actually find a coach or a colleague to run these past. So I've just been kind of framing the problems, and maybe you guys offline can sort of serve as my coaches, or maybe already are in some facets of them. You'll see. First thing was I first came up with 2 problems that I've been struggling with. The one being to do much better than break even in day trading or swing trading during the bear and sideways market. The second problem is to get in with a big position size at the beginning of the next bull market, which by definition, the beginning is a time of fear and uncertainty. So those were the 2. And then I sort of had some vague ideas about personal non-trading problems that I haven't completed. And I wouldn't necessarily want to share if I did. So we'll just stick with those 2. But then I thought, well, those 2, the do better than break even during the bear and sideways and get in with big position size during the bull market, are not really unfixable. I don't really consider them unfixable. Challenging, yes. Ongoing, yes. Not fixed yet, no. So they're not quite unfixable. So I thought, well, actually, they're an aspect of the larger problem that maybe I can almost believe is unfixable. And that's the one that is posed to me by lesson 9 in the Super Trader Awakening program, which is to basically create your infinite wealth plan. Now, I should say the Super Trader Awakening, I've timed out on that. So I'm technically not in the program anymore, but that doesn't stop me from completing the lesson, which is very pertinent to my hopes and dreams. And it doesn't stop me from doing the next lesson, which is to, once again, the reinvention game. And or the one after that, which is to consider, I think it's to do a trading blueprint. I'm not sure. So I'll continue with that, but I'm kind of done, I guess, unless I decide to re-up, with Van Tharp Institute to complete things. But I think I probably won't, because I know Van said don't trade while you're doing the Super Trader Foundation and Super Trader Awakening, but I very much did trade. And so I couldn't really benefit that much from Super Trader Professional, since I've already had so many of those courses anyway. So I'll probably say it's good enough, but we'll see. But in any event, I'll still finish the lesson 9 and 10, and the part I'm on in lesson 9, I'm on the part where they say to create your infinite wealth plan, and that and there's a part of that which is go through the template for increasing your income by 1,000%. Okay, so that's my unfixable problem. How do I increase my income by 1,000%? I'll add passive income during what I call pre-retirement, that I've probably discussed with you before, which is basically I still do some cybersecurity consulting work, but no marketing, no struggling to get more of it. I'll just take it if it comes. So that's what I consider the core untractable problem. So how am I going to fix that? Well, I'm doing the group session with the group Libby Adams does this 28-day course. I did that. Now in February, she's doing the group redo of it. So I'm doing that. So I'll kind of maybe, get some feedback on some of the spiritual aspects, the spiritual transformations, the internal work that you would need to do to increase your income by 1,000%. Heck, I really would only need it to increase by about 300 or 400%. And then I'd have all my hopes and dreams that I currently hope and dream for. So that's one thing, and I'll move on then. I'll chunk down though to the trading aspects of this and go back to the big problems within that larger problem, which are to do much better than break even in swing and day trading was the first of the two. The core problem of that, there are two core problems of that. One is that I don't want to spend all day looking at the screen. In fact, the definition of passive income, according to Van, which I basically agree with, is it can be trading, but it should take you less than an average of 2 hours a day. So I think I'd be happy with that. So that means I shouldn't and I don't want to spend all day looking at 3-minute charts, but could I spend all day looking at 30-minute charts? And so I thought maybe I should do the Dan Bloom version of the Kata 2 challenge, which would be to do 30-minute charts, set my clock alarm to wake me up every half hour to look at the charts and obligate me to act once every 30 minutes based on those charts if I see a Kata 2, an SSC, or a CD setup on the 30-minute chart. So that's what I'm thinking, and that's what I would need coaching on as we go on. And I'm thinking for the 30-minute chart I need an end of day tweak to that, where I look at the market and sector context and see whether it's a really bad idea to stay in this swing trade the way it is, or whether I need to peel the position or close the position. That's kind of what you always do with the swing trading portfolio for RLCO anyway, and I would need to do the same if I expected my Kata 2 challenge to work. And then I also thought, since I was looking at the market and sector context anyway, I would maybe not forego long or short trades in my challenge if the market sector context was unfavorable. But maybe I would know whether I thought it was unfavorable. And, when I did my spreadsheet assessment afterwards, I could say, well, what if I had not taken those trades that I thought were unfavorable? Would that have helped or hurt my bottom line? Which thought kind of brings me to my second core problem, which is we already talked about, which was putting the second P in PPEA, right? Which invaluable coaching last night, that really, it's not so good to have a plan which says, if this happens, I'll consider doing that. Ken pointed out, trading's like being in the heat of battle, and you don't want to be considering what to do in the heat of battle any more than you have to be. You really want to be pre-decided. If this happens, I do that, and take that down to the level of granularity that you need to maneuver the tank or the F-16 or whatever you're in. So, my tanks and F-16s are PSARs and support and resistance lines and RL-10s and all those things, and and stop limit orders and exit orders and that kind of thing. So, pre-decide those decisions using a more elaborate version of the trade framing that we've been doing with the 7 questions of trade framing, which we also discussed in the video last night. And I will start using those. And, when I start this 30-minute kata 2 challenge, which I would try to do for 90% of the market hours during the week, just to give myself a little bit of time to have a life outside of checking the chart every 30 minutes, which I could also maybe do on my mobile phone. I've got to work all that out. I'd need coaching for that, from whoever, or from myself, from my higher power. I don't know. But again, the thing is, this is, what I need to do to solve my two core problems of being able to trade in the bear and sideways market with RLCO and do better than break even, in fact, be profitable, and to be able to take the opportunities rather than considering the opportunities. The second one, I'll just be a lot quicker with this. The thing about getting in with big position size at the beginning of the next bull market amidst fear and uncertainty. Well, that's the thing. Prior to last week, I was 60% sure the current bear rally could only break out into becoming a sickly bull. Those beliefs were coming from Mark Boucher. Then last week, I had an interesting webinar from Stansberry Research where Steve Sugarud and Brett Eversole made an interesting case that the historical precedent creates a distinct possibility that we're still in a secular bull market within which we have been experiencing a mini bear market. Now, I spend too much time thinking about that stuff, and that's part of the issue that Ken highlighted last night. And I don't know why I did this, but I just got obsessed with the earnings reports with Apple and Google and Amazon and Meta. And I put some, just quick grab some analyst headlines from Seeking Alpha and put them into the charts. I might still look at the headlines, but I probably won't put them in the charts again because it really is a distraction, certainly for the group. And it might be a distraction for me. I've got to think about that. And even, reading the market timing reports from Reeds, is that a distraction? I don't know. I resonate a lot with the idea that we should just focus on the price action. And that comes back again, whether we're talking about a day trade or a swing trade or about a big campaign to get big position size into a new bull market amidst fear and uncertainty. When you think that bull market may be developing, you need to have not just planned to do it, but you need to have prepared for how you're going to do it. In 2020, I was trying to do this. Well, you remember 2020's bear market that made a V bottom and it zoomed right back up. I did not get back in with big position size. I got in with little dribbles of things because there was too much fear and uncertainty. So this time I'm already dribbling in. The portion of my long-term portfolio that is allocated to this possibility uses the big Vanguard ETFs, the VTI, the VB, the VEU, the VWO, and the VNQ for the different sectors. And my plan is when it crosses the 10-month moving average and then it confirms that in the next month, I start to get in. Well, actually, what I back tested, I get in 100% when I get that confirmed moving average crossover. But the best I was able to convince myself to do and not even quite this in 2020 was to get in like 25% position size. So now it's happening all over again. I'm in a couple of them now with 33% position sizing. What's my solution? I'm working on back testing because I want to improve my conviction in my current rules seeking more guidance from universal mind, my higher power, to try and see when do I get to 100%. So I'm working on the back testing. I had a breakthrough last week, got my first TradeStation Easy language program as an indicator and as a strategy working, and figured out how to modify the code of existing TradeStation indicators and strategies, such as the paid trade station parabolic SAR, which is the same as the PSAR, except it uses price instead of RL10. And I compared the charts for the same thing, and it comes in a dot early, but it's, comparable to what we normally look at, with the RL10 PSAR. And well, I got that to work. Unfortunately, the strategy tied to the PSAR using the trade station has doesn't make money on a few of the charts that I looked at. So I need to tweak it so it can make money. And I know Ernie's working on the same thing with EdgeRater, so maybe we'll talk about that and see if we can figure out a way to backtest getting this PSAR working. And if I could do that with the PSAR, then I could do it with the 10-month moving average, and I could get the conviction I need to put my big position size into the bull. And we'll see how that goes. To be continued. Aho.
Just a couple quick thoughts before I forget. Hey, maybe reading the headlines and all and assembling it is a nice. Maybe that's your technique to remind yourself of what the other guys are thinking about, trying to make sense of that, and just shake your head in parental fondness. Oh, the silly monkeys. But it'll
Yeah.
also satisfy your silly monkey that you're doing due diligence according your. It's like before I get to work, I got to set up my paper and get my coffee and do this and say hi to my. That's getting my mind right. But that ain't doing work. That's just being pleasant and enjoying the moment. So I enjoy reading those things. It's just that I'm not ever going to act on it. I don't confuse that with actionable information. And that is, if you had a positive affirmation of that, you would actually be reinforcing the mindset that you need to be divergent in your thinking as soon as you start working. If you think about your kata 2 challenge, the swing kata or hyper swing, that's what I've been doing the last 3 weeks. 30-minute. And then if you go to that section of the presentation about Apple, it was 100 shares or 500 shares and the logic behind that. What you're doing, you're pre-qualifying it every day to see if it meets the criteria to be a swing trade. And if it does, I trade it with 100 shares, which is 20% of the intraday size, just as a round number. And if it's not good enough to hold overnight, don't hold it. That thing is too hot to handle. Don't hold it. Doc, it hurts when I do this. Don't do that. Do something about that thing that's making it hurt. So that really is the. Now, if you can get your trade frame judgment to 5 seconds a chart, does it need to be longer than that? Prove to me it needs to be longer than that. 5 seconds. Okay, 30 seconds. So you dial in 15 minutes beforehand. You could evaluate 30 charts in 10 minutes. Make a decision and just put the dot. I want you to go to where I do the speed runs in the swing course, and foundations probably somewhere, where I go through. I put TC2000 portfolio on a timer starting at 10 seconds. In 10 seconds, I declare what my position is, buy, sell, hold, or what my strategy. 10 seconds, and then go through 50 charts in 5 minutes or whatever. 500, that's about 8 minutes.
I've got to
That's how
work my
long
way
it
up
takes
to
do
that.
50. That's your. Well, that is nothing more than the flash of Malcolm Gladwell's blink, or the blink is like training your thin slicing. That's how you train that. There's a couple videos of me doing that live in one of our live trading workshops, and that's where you want to get to. That's the best 10 minutes you could spend. You could get 30 decisions made in 10 minutes, and then that's why I say compare how long it took you to assemble the headlines, craft them, and paste them, and have the chart. If that was
Yeah.
10 minutes, that was one thing. So I would say that. So yeah, nice job on that. Oh, that's it. Yeah, that'll be the. I like that one. That is such a nice tone. I'm going to start adopting that one as the as the next. That one means next. Yeah, Tom sent a that Harvard Business Review article by Dave Snowden that introduced the Cynefin model, an alternate framework for uh, describing the condition of the world, the market, the situation, to decide what the rational approach might be. So we use a simplified version of that with the structured, semi-structured, well-structured, and but we actually teach the Cynefin model with it, which has four distinct regions of where expertise and understanding of the, and then a an odd-looking fuzzy boundary between those called chaos. And so you end up going from one state to another state. There's a moment of chaos, and that's the glue that holds the Cynefin model together, which he has been successfully teaching as a software developer as a way to improve on things like Scrum and Agile and deliberate planning. So we actually teach that in the Army. It renders back to our three. We make a simplification of that, to be honest, where we just say, is it structured? Troop leading procedures, go. Is it semi-structured? Military decision-making process, rational model. Is it unstructured? Do Army design methodology to feel your way around through there and get it just structured enough that you can hand it off to the planning team. That's what we actually do. We have commanders and his advisors making intuitive, professional, integrated judgments, coming up with tentative plans, and he hands it off to the planning team, who then puts science onto it. And then he goes off to inspect the battlefield and do whatever, talk to the next planning team. So we have all these little planning teams building out the detailed plans that we need to launch units. And so we use the commander and the staff for those two very important. And then we have non-commissioned officers and junior officers doing the troop leading procedures for the routine preparation. And that's where we think we win, is because our non-commissioned officer corps reliably gets it done. That's what makes our Army different than any other. It's not the genius of it or the smartness of it. It's the non-commissioned officers who are empowered to prepare and act. So that's what I want to say about that. And then I hung the other thing in there that was the stop planning, start deciding article that triggered me Friday. Okay, Shenlong.
So we do the check-in and work in progress together, right? Okay. Yeah, it's a good week for me. Last week, nice weather, but I do have some challenges. So my word of last week is faith, inspired by Ernie's words. Thank you for that. And I think faith is really important, especially, maybe I could, maybe I couldn't say I'm an old man now. So at least in Chinese culture, when you get to a certain age, you automatically get a title old, and people call you old. My last name is surname is Li, so people start to call me old Li. At this kind of age, really faith is really important you know, can you make another life? I guess probably I could. You know, I see some people at their 70s change their life dramatically. My point is, I have to have faith in what I'm doing. That's the meaning of the faith for me. The faith gives me courage to, deal with challenges. There's a bigger challenges, there's smaller challenges. The smaller challenges, last week I do my kata challenge. I decide to do the collapsing dragon challenge. I decide to treat that only. I take that signal only, and I switch it to a 1-minute charts. So what I found out the challenge is, I know that. That's why I do the kata challenge. So I repeat my bad habit. I repeat the same mistake. One is, I do not frame to take the collapsing dragon. That what exactly Ken talk about, at his beginning. Also, the challenge can harm faith. I'm tired. I did not frame that for whatever reason. Then boom, the price moved down to the price I should take the trade. Oh, that's what I did last week for my kata challenge. Then I will continue that until I conquer that. No matter what happens, I frame a trade. The other mistake I take is so my plan is to take collapsed dragon only. Then some other pattern pop out, I take it. I treat that as a mistake, I didn't plan that. I take it as a mistake. That's my kata challenge last week. I did frame some swing trading. I used 2 setups. One setup is a hands triple screens. I majorly do that for the last 2 weeks. I really appreciate that. Because if I don't do the trade, I couldn't understand the setup. Until last week, I didn't realize I need to get in hourly chart breakout to trade the short-term setup. The short-term means the long-term weekly up, mid-term daily down, shorter-term hourly breakout. I didn't get that until last week. That's how amazing a practice can take me to the next level of understanding. That's my swing trading. I did I did read the last section of Creativity202. That's called the end of world, and the review of the course. A good maybe 15 sentences about the course. Really interesting. What amazed me, Coda, the end of world, the hero threw down what they call the super, what they call the battleship. Let me find out. Or the super Zeppelin, that's the article about. Then I remember last week, U.S. Army threw down the Chinese airship, the balloon. I just amazed about, coincidence or not. I don't know. I need to look at what happened next. the world will become very interesting for the next step, how Chinese react to the shutdown. I go over some social media before the shutdown. The Chinese social media brag, hey, your American cannot shoot that down. Then after the shutdown, they start to complain. Yeah, there's a civilian balloon. Why you shoot down? You overreact. I just found that interesting. I don't take a position either way, but just found out that that's really interesting. This is an interesting word. I hope. You're
Both
muted.
sides of the water, for some reason, yeah, I fixed it. For some reason, both sides of the water are interested in a fight, and I just don't understand why. Couldn't we
It's
just read the
horrible. You know, I have two Chinese daughter-in-laws now. Well, one of them was really an American, but she was because she lives in D.C. and was born in D.C. But the other one is from Taiwan,
Yeah.
and she's been in the States for 6 years. So I got two daughter-in-laws in this fight. I don't like this.
Yeah. Not a. Yeah, that's been my life for the last 45 years. I hate that. Yeah. So, aho, Chunlong. My one word of advice on that on your Kata challenge there, old Lee, is the reframe the mistake of taking the signal that you weren't planning to take. You had planned not to take it, but you saw yourself doing it anyway. I think the mistake is not recognizing that there was an opportunity to do that, to mark it up without putting money on it. So if you can get into the mind state where you say, hey, I see the pattern, I mark the pattern, I acknowledge the pattern, I just don't put money on the pattern, and I still manage the trade to see how it's doing, I check in with it, that will allow you to differentiate between trades you notice and trades you take. So you're not surprised. You don't screen the other ones out. You become aware of them at a distance. So you're actually managing the herd while still committing to just working the trade that you have. That's where we end up getting to in the Kata 2 challenge anyway on the coaching session, which is once you've marked up the trades you took, only taking those trades, now go back and look at the chart and see what else was there and how many other patterns you can recognize and document. So that's a two-step process. And then you learn to see that there are a bunch of other things going on, and you can get tunnel vision if you're not careful. So I would not stop doing what you're doing. I would just change the way that you are managing and say, hey, you obviously had time to be able to see it and mark it and take it. So just do all that. Just don't put money on it, and then you can compare those strategies, and then you will save yourself 2 months of pain of going back and then looking at the chart again and seeing what else was there. So as long as you can do that, you'll be fine. And then I wouldn't treat that as a mistake. The mistake would be seeing it, paper trading it, or not paper trading it, but actually putting money. That would be the mistake, because that's an impulse control as opposed to a span of control issue. Okay. So that's what I wanted to say about that. Go ahead, Ernie. What you got, man?
I was just going to let you know. Well, first of all, I was going to tell you that the weather here is really beautiful. I think that it's going to be it's a good transition. You know, we're ending our phase with Creativity 202, going into the next stage, and I thought 50-degree weather and sunshine. That's a good start for the next phase. And the other thing I was going to let you know, I fought the accountability partnership thing, and here at the end, Tom Sullivan and I have agreed to give it a shot, and we're going to see what happens. And so I'm kind of looking forward to that, to see what we do. The last week, whenever I talked, I had something prepared for about myths and all of that, and I meant to talk about faith, just brief, and instead threw the myth thing out the window and went crazy with whatever I was talking about. So this week I decided I'm not going to waste time because obviously I don't bother to follow what I plan to do. But it was very interesting to go into that. It wasn't a rant, but and I've been thinking about it because I've decided I've always had my style of investing, and it's been conflicting. I would say not conflicting, but I've decided that what I really wanted to do is to have faith in what we're doing or what Ken does, and to trust that. And I wanted to sort of block out everything else. I mean, I watch um, CNBC and some of these other things. But I really felt like I want to block all that out for now because, and then just concentrate on what I'm doing. I want to work with the the PSAR, and the Kata 2 Collapsing Dragon. I think I really want to do that, and I think it'll be good to keep all of the other things. I mean, they're not consistent what I'm trying to do with the tortoise community, and so I feel like that's going to be what I'm going to do for a while now, and I think Tom Sullivan will help me with that because the two of us will discuss what's going on in the nightly podcast. We're going to discuss the creativity, and we're going to discuss PSAR, CD, ED, and K2. And I think that's going to be good for me because it'll help me focus. And the other thing that I plan to do is work on the foundation course. I really appreciate the fact that Ken keeps it available. I think that my perspective is going to be different and much better and more focused. I talked with Phil Wu about some things, and then I saw that he had put his Cornell notes out on Amazon, and so I grabbed those. I'm going to go back through Foundation and uh, listen to the videos and work on it again. Go back with my past notes and also and take Phil Wu's perspective on it as well and use that. So it's been really great to be able to write and talk to everybody. I want to keep doing that because I hope I get to stay in touch with everyone, and it's really good to get the reinforcement. And like I last night before I went to bed, I decided to check out the evening podcast and got to see what Dan had done. So I was going to go to bed, but it kept me up for another hour and a half listening to that. So uh, it was really enlightening to see what Dan was going through because I've done the same things, and so I appreciate him putting himself out there, and then us being able to benefit from that. It was really good. So I'm looking forward to post Creativity 202 and the progress that I know I'm going to make, and with everyone's benefit. I appreciate the learning that I have received from all of you, and I'm looking forward to it. So um, thank you, and I hope.
Yeah, ask her to go. Make sure you leave a nice rating on the Amazon for the ebooks. And I think what you and Phil ought to be doing is figuring out on the EdgeRater project how to do the same thing with the Cornell notes when you get that sorted. To teach people, eventually, it's going to be how to teach people to use EdgeRater to do whatever it is you guys end up coming up with in the form of an ebook and a course and stuff like that. Hey, I wanted to share this. This is a visual that was in my head as I was talking with Carol yesterday about time choices you make on timing, and this is going to be connected to Dan's project. So let me share this real quick. I put it into graphic form. Shite. Let's see. Annotate. Let me know when you can see that. And as always, when I try to share a screen in the middle of a meeting, it's going to crash here in a half a second and then restart. So please bear with me. Let's see. Pause. Recording in progress. All right, so we're back. Yeah, so this has to do with the phenomenon I described with Dan about monkeys being surprised. You know, yeah, you have a little guy looking at his screen. He's on a 1 minute chart, and he has some bag of money that he uses to trade on 1 minute charts, and then a guy on 3 minute charts, and they're all sitting in cubicles. And then you have a guy out there who's makes a decision on every 30 minutes. And he has a bag of money. So what happens with rule-based traders is that there will be a moment when the bar closes, and then the next bar opens, and you get some window of time in here. Let's just call it 1 minute from pulse to pulse. And his rules say something like, on close, evaluate, and then act. That's sort of what that says. When the bar closes, then judge it according to your rule set, and then if the rules say act, then act, which could also be act or no act. The act of not acting is an act, so that's going to be yes or no. So he can't act on his rules until the bar closes. So as soon as the bar closes, there's an event. And now on 1 minute chart, look, he's tracking in the 30 minutes. He makes a decision every minute. Check or hold. So on this top one, the 1 minute trader, he makes a decision every minute. Check or hold. You'll see that thumbs up. Yeah. So the 10 minute trader acts when the 10 minute bar closes, the 20 minute bar closes, and the 30 minute bar closes. He makes a total of 3 decisions. The 1 minute trader makes 30 decisions. The 30 minute trader acts when at the end of 30 minutes the bar closes, and he makes 1 decision. So this number here says as the digital clock cycles and the bars close, here's how many people are making decisions on that moment. Half the time it's one guy. Half the time it's more than one. Out here on the 30-minute, 6 people are acting. On the 15-minute, 4 people are acting. On the 7-minute cycle, 1 guy is acting. Now remember, it's not just how many people are acting, but it's also the amount of power. I cut off this thing. The amount of power you have might be, what's the number of people trading in that category, and how much money do they have? Because the number of people times the amount of money they have equals power. So maybe there's one guy day trading and he has, I don't know, he has $1,000 of risk, and maybe there's two people trading, or the guys that are trading on 3 minutes have a total of 2,000, 6,000, 10, 20, 50. So when you multiply those times together, what I want you to notice that just the number of participants periodically is going to surprise you with how many people are trading it. There's a sudden burst of activity. And then when you multiply how many people are making the decisions by how much money they have, and you might think that the guys trading on 30 minutes can't be bothered slinging money around on 1 minute. So when you start putting that together, you might be a day trader, and then all of a sudden there's these sudden bursts of new buyers and sellers that catch you completely by surprise, right? And now suddenly that thing goes well beyond. That's the explosive move beyond, especially because in these regions in here, this is probably where you're seeing Z3Ps and sideways quiet channels, and you're getting chewed up. And then every so often, something happens that makes that thing move much bigger. And so you might get a burst and then burst. So the reason I like the 3-minute chart is that prior to the 30 and the 15 and maybe the 2 10s, where suddenly there's a lot more market players, that also equates to how much money is being slung around there. I get 3 minutes before that bar happens. In the 27th minute, I'm making a decision, and I got a couple minutes so that my position is, so that on the 30-minute, when the explosion happens, I'm already in the position. That's what's happening when you get the RLXD, for example, or the R10 collapsing dragon. Then suddenly the timing belt hits, and you get that sudden smash of all of the rules that are firing on close. So just remember, on close, evaluate, act, which is yes or no. So keeping this in mind reminds me that there's a bunch of little monkeys all operating on their own time frame and with their own amounts of money that are making this thing jump around. And so I'm not allowed to be surprised when price happens. I'm supposed to be prepared for price to happen. Don't be surprised by price, be prepared for price. That may be the best phrase of the day. So I want to leave us with that one. Don't be surprised by price, be prepared for price. So that's today's motto. All right, I'm gonna let's go ahead and check out and get ready for the day. We got things to do and places to go. We went down to our favorite little barbecue restaurant and bought about 5 days of supplies to bring home. My wife's heading out to California, so my son and I have assorted barbecues to eat all week. So I may go ahead and get started on that for breakfast. There's nothing better than a breakfast of barbecue in Kansas at lunch. I'll call it brunch, then I don't feel so bad. All right, that's everything I got, fellas. I will send you this flashcard when I clean it up a little bit. But I think that will be a living reminder of the power of preparation. So that's my checkout. This will now get us ready for your checkout and your word of the day. My word is preparation. Chunlong.
Edge.
Edge. Dan.
I've got faith.
Ernie.
Continue.
And so be it. We'll see you guys.
See you. Bye bye.